You speak of the silver to gold ratio, and that's a big one. I mean, look, let's go back 5,000 years. The geological ratio since the beginning of time has been 16 to 1, and it was that way for nearly 5,000 years. In other words, we'll call that God's ratio. You dig a big hole in the ground 5,000 years ago, and you would receive 16 ounces of silver for every 1 ounce of gold that you would pull out. And even Isaac Newton, when he was developing the ratio for the mint hundreds of years ago in the UK, 16 to 1 ratio. The average price ratio, we'll call that man's ratio, really since the Industrial Revolution, the average has been about 45 to 1. And that's been largely because silver's role as a industrial metal and gold's role as a monetary metal. And what's really interesting right now is that it's coming out of the ground, according to my friend Keith Neumeyer, who is the CEO of First Majestic Silver, that it's coming out of the ground at 7 to 1. It is disappearing. It's found in nature, like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. The big deposits were found forever ago. To me, what has happened is largely driven by central bank suppression of silver, and we could talk about this for hours, but what is really changing right now is the amount of silver that is being imported into the United States. I truly do believe that someone grabbed Trump by the back of the neck and said, we must start importing gold and silver. The rest of the world is on to what we have been doing. Now, they have been holding down silver, in my estimation, for a very long time due to the military-industrial complex's need for silver. It goes well beyond electric vehicles. It goes well beyond solar panels. I have a very good client who is a consultant for the Department of Defense who tells me that there is as much as 500 ounces of silver in the cone of the majority of the high-tech cruise missiles, let alone aerospace, let alone all of the high-tech components that are used in military. This is the reason why 8 Western banks, 8, have held the largest concentrated short position in any commodity ever traded, ever in the history of the COMEX, in silver. Year to date, Paul, we've seen almost 11,000 tons of silver that has come into the United States, most of it coming from London. The amount of silver available in London right now for delivery, the float is 155 million ounces, yet they are trading somewhere in the neighborhood of 600 to 700 million ounces every day. However, reports are that they only report the final settlement numbers, not the numbers of trades that go into that final settlement, which would put it as much as 10 times higher. In other words, they are trading anywhere between 600 million and 700 million. You can multiply that by at least 10 times. You're talking 3.5 times annual global mine supply every single day is trading on the LBMA with a float of only 150 million ounces. What could possibly go wrong? It's a big, big problem. And I would simply say to you that the gold to silver ratio represents the opportunity of a generation. And I mean that sincerely. I'm not trying to sound like a salesman. Truly, this is something that, look, this has happened this represents less than 1% of all of history. This ratio, which for 5,000 years was 16 to 1, up at this level, anywhere near 80 to 85, you're talking like 0.5% of all of history seeing this kind of distortion. So yeah, to me, it is the trade and the value, the asymmetrical value, low downside, high upside, of a generation. In other words, people who have gold would be wise to consider trading some of it into silver at this ratio. One last point. When I first saw something like this, it was 2010. It was the first time I ever saw it. And it was the first podcast I ever did with Bix Weir. And I told everyone at that point, look, I said, Bix, this is the second time in human history in 2010 we saw 85 to 1 ratio. I said, we got to tell everyone to sell their gold. I'll sell it to the market, convert it to silver. Many did. Within 7 months, you had just bypassed the 150, 200-year average of roughly 45 to 1 to 37 to 1. So anyone who would have traded an ounce of gold in middle 2010 at 85 to 1, by mid-2011, you had $915 gold and $50 silver. That's 37 to 1. You would have you could have traded back into gold with 37 ounces, way over doubling what you started with. So to me, honest to God, this is a gift that you only see once or twice, if you're lucky, in an investing career. So yeah, I think this is an anomaly of epidemic proportions. I think the market cap on that article that you're putting up right there, if I'm not mistaken, from the Silver Institute is full of nonsense, because it's giving you a market cap based upon all of the silver ever mined. The majority of the silver that has been mined since the beginning of time is gone. It's destroyed. Yep. It's in landfills. Yep. You use so little of it inside of whatever object it is that it's being, an iPhone or the first calculator that you ever used when you were a kid. The hair, it's all gone or blown up. In my opinion, if I had to guess, I would say that the true market cap of silver is far, 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 if we were to really let the price come out. If silver's role in solar and EVs and electronics, AI data, all of this stuff, when you factor in the annual mining production of about 820 million ounces, which is already running well below demand of about 1.2, 1.3 billion for 5 years in a row, we've seen a structural deficit where, monetary demand and industrial demand is far greater than supply. I think you could say, depends what the price is. Let's put gold at $5,000. I guess you could say, if you put gold at $5,000 and you take the historical market cap, I don't know, I think you could see a real market cap of, doing the math, I don't know, between $2 and $6 trillion. It just depends upon, I think it would be multi-trillions. It depends upon whether it becomes both a monetary reserve asset and a irreplaceable industrial metal. The problem with trying to define the market cap, Paul, is price discovery has been destroyed. But I will simply say this. Right now, especially in the United States, I've been screaming about the amount of gold and silver that the countries around the world have been buying, such as Saudi Arabia, China, India, Russia. China is the second largest producer of silver in the world. They're flying all around Latin America, in particular Peru and Mexico. They're buying silver doré and silver concentrate, largely directly from the miners, paying double what the West will, sending it back to China to refine it. They're doing so to disintermediate the marketplace. But the amount of demand that we have seen where Russia is adding it publicly, they say we are adding it to our strategic stockpile. Saudi Arabia just took a huge position in it. India has bought between 700 and 800 million ounces over the last 6 years. All of these countries using the suppression of the Western paper price to stand for delivery. But what makes things so crazy is the amount of silver that is now coming into the United States. And in the first 3 days of the September contract, or first 4 days of the September contract, well over $2 billion worth of silver was delivered already into the COMEX, and we have the whole month of September ahead. That was last week. I haven't seen the numbers yet this week, but this has been every single month. As much as $4 or $5 billion worth of silver have been coming in minimum every single month since the beginning of the year. Big money in this country. And who is it? We don't hear anything about it. Same thing is true with gold. There are some very, very big money interests that are standing for delivery. And the real target of all of this is the LBMA, which is literally running on fumes. One more point to make on the LBMA. For a good portion of this year, the LBMA, in my opinion, has been teetering on default. Now, that's a big statement. The LBMA is a T+1 settlement market, where T is trade plus 1 is settlement. On the third day, those bars should be moving your way. The Bank of England tells us for most of the year that it's really about T to plus 6-8 weeks. Now, because there's a shortage of manpower and trucks, we're supposed to believe that the Bank of England doesn't have anything in the way of trucks or excess manpower to move the silver that belongs to these contract holders to where it should be going. It amounts to getting caught with their pants down. And this is a trend that we see accelerating, in my opinion. I think the market cap really, once price discovery rears its head, will be much higher than people think possible, much higher than the Silver Institute says. But the real flaw in their metric is by trying to figure it out based upon all the silver that's been mined. The majority of it's gone. Over the last 75 years, it's in landfills. As the price rises, demand increases. That's usually not the way it is with assets, and making the shortages even worse, that is a big deal to factor into it. Look, silver's already up 43% this year, and the dollar's down 11%. 52 million ounces were delivered into COMEX this month already, with 3 weeks left. We have between a 5 and a 7% lease rate in London right now for available supply. It's normally 1% or lower. This signals that the big money, the retail investors, the big money, they're scrambling for real metal, not empty promises. And the big money above that are basically saying that your paper promises are crumbling for the industrial giants, the sovereign wealth funds, all these big money interests saying we're standing for delivery. And then a very quiet thing happened the other day. Again, this should be all over the news, but shh, don't tell anyone. The United States added silver to the strategic minerals list. It's now a strategic mineral. It is not just an industrial metal anymore. And so when you talk about numbers, when you talk about real numbers, silver has been one of the most suppressed metals or commodities on the planet for a long time, to the point where it's interesting when you talk about the military-industrial complex's role in it, and there's a fine line between conspiracy and reality. But look at the largest silver trust in the world, SLV, which is literally the largest silver trust or the largest one or two largest stockpile of silver in the world. It's run by JP Morgan and BlackRock. JP Morgan paid a $920 million fine to the Justice Department for suppressing the silver price a few years ago. The largest fine they had ever passed out. Now with BlackRock involved in it, who owns all of the military weapon manufacturers but BlackRock? They hold the price of silver down to make high-tech weapons, to sell them all around the world to NATO and all of the countries, to blow up places like the Ukraine, and then who gets the reconstruction contract? Oh yeah, it's BlackRock. Now I'm just simply saying there is a fine line between conspiracy and reality, and the more you dig into what silver really offers and why 8 banks would step on the price of silver, this little tiny commodity, to the largest concentrated short position in the history of the COMEX market, it tells you that silver is far more important, far more critical than we are being led to believe by price alone. And when price discovery is allowed to manifest, because it is now being challenged by the majority of the other countries around the world, the big ones in the global south, they're like, you know what, we're going to stand for delivery, no more paper promises, and that's changing the narrative right here, right in front of us.